Good evening, everybody. Welcome to the Sunday night strategy session for January 11th, 2015. You are at the place to be on Sunday nights at 8 p.m. Eastern. Brought to you by winningedgetrader.com. Winning Edge Trader is run by Paul Schatz and myself, Michael Saul, also known as Tiny. If you are interested in one-on-one coaching with either myself or Paul, please drop an email to coaching@winningedgetrader.com, and one of us will give you a call to discuss it. We do all our own coaching. We do not farm it out to other places that say they represent us. If you sign up for coaching with us, we give you the coaching. So if you are interested, coaching@winningedgetrader.com. Glad to see so many people back from last week. We didn't scare you all off. We're going to get started right now and talk about the economic reports that are coming up for this coming week. Lockhart speaks at 12:40 p.m. We also have a 10 o'clock number on Monday, but if you see yellow, I'm probably going to skip it. Even orange, I'm not really concerned about, but yellow, I'm definitely skipping. All right? So Lockhart speaks. The JOLTS job openings on Tuesday and the 10-year bond auction. European Court of Justice ruling. It's tentative for Wednesday, so that could give us a little bit of shake and bake. We have retail sales, core retail sales, import prices, business inventories, and crude oil on Wednesday in the morning. Thursday, we have PPI, the weekly unemployment claims, core PPI, and Philly Fed. Philly Fed is red, and it comes in at 10 o'clock. So if you are an intraday trader, it can shake and bake you. Friday, CPI, core CPI, and then the preliminary University of Michigan consumer sentiment also comes during the market hours at 9:55. So you want to make sure that if you are an intraday trader, you are aware of that. Let's look at earnings calendar. Oh, boy. All right. This week, Alcoa. What does that mean? Somebody tell me. Monday after the close, Alcoa reports. Tell me what that means. Anybody?
By Saran wrap.
By Saran wrap, right? Anybody? Saran wrap is plastic. There, dopey. Right. Earnings season officially starts. Right. Exactly. Okay. So Monday we have Alcoa. Not that I really don't care about it. I don't know if Paul is really going to be glued to his set for Alcoa, but you'll be hearing a big deal about it. On Tuesday, nothing really significant. On Wednesday, the Wells Fargo. That's before the market. Okay. On Thursday, Citigroup, Charles Schwab, Bank of America, Intel. Okay. That's going to be big. Here we go. JP Morgan, I missed. Okay. But you say that's Wednesday too. How the heck did I miss JP Morgan? Oh, because I'm going too fast. You are correct. JP Morgan. Schlumberger. Schlumberger, I know. I just refuse. So Thursday will be interesting. And then Friday pre-market is Goldie Boy. Just read an article this weekend that says Goldman Sachs will be out of business within 2 years. Did you read that article too, Paul, or no, you didn't? I know. I'm not kidding. It's a true article. I'm not making that up. I read an article. Goldman Sachs, within 2 years. So anyway, Congratulations to Tony Romo. In Italian, Romo means choke. They did cover, though. And I cannot believe that the Broncos laid down and rolled over for the Colts. But I think the Colts can beat the Patriots. I don't know if they will. I think it's going to be a great game. And I think Seattle will beat Green Bay, and I think it's going to be Seattle, New England, but I would love to see Seattle, Indy. It would be some freaking game, man. Luck is just absolutely incredible. Without further ado, I'm going to hand over the reins to Mr. Schatz, and he's going to go over the market with you, answer any questions that you have regarding the market. I will come back and answer any stock questions you have. So get your questions ready if they're about stocks. After Paul's done, I'll come back and we could, I'll take all your questions as far as stocks. You want me to look at some currencies, whatever you want me to look at. No penny stocks, please, okay? I'll just, I'll look at them, and if I see they're a penny stock, I'll just ignore them because it's really not cool. All right. Let me switch Paul over to Organizer so he can read the questions. And I'm going to switch the presenter over to him. Okay. I will be back shortly.
Okay, good evening, everybody, and welcome to Sunday Night Strategy Session. As a Cowboy fan, I'm licking my wounds. Turnabout is certainly fair play. I just wish it wasn't today. So I think we all know it was a good catch by Des Bryant, but the refs gave us one last week, and they taketh away one today. So I also think we just saw Peyton the swans on Peyton Manning's career. I'm going to go out on a limb and say that they're not. Denver's done with him at quarterback. I think he's. You saw he was aging, and I think this was the end. And it was certainly the coming out party of Andrew Luck, who is going to be the best quarterback in the National Football League in the next couple of years. So let's. Let me think where I want to begin. So, Johanna, my cough's okay. For those of you who were part of the last Thursday night, my webinar, I had choked. I forget if I mentioned it on Thursday night, but I had choked either during or after making a taco. My kids were asleep. My wife was upstairs, and I had put this awesome, I think it was, we had bison tacos, and I put it on my homemade tortilla, and I put it up to my mouth, and I coughed. I inhaled, and the ground beef went down the windpipe, whatever you really call it, esophagus. It got stuck, and I was choking. So I was walking around the house unable to breathe or talk, trying to find my wife to give me the Heimlich. She was nowhere to be found. Thank God, by the time a couple minutes later, I'm debating calling 911. I started coughing a little bit. I couldn't really breathe, but I could breathe a little bit after cough, which I know is a good sign. So after that, I went back to this steroid inhaler to calm my, whatever it is, bronchial tubes down, trachea, whatever it is. In any case, thank you, Johanna. I think I'm okay. I've got a big cup of water and tea in front of me. So let's dive in. If you get my newsletter, then you probably got the first edition of January earlier today. I will be posting a couple of the articles on my blog, investfortomorrowblog.com, probably tomorrow morning. But in essence, here's what I'm going to tell you, and Tiny has mentioned this before, no secret. The first 5 days of January were up. We had 2 crummy days. We had 3 okay days. The first 5 days are up, which means there is a 76% chance that the entire year is going to be up. We're now watching the January barometer. If January is also up and the first 5 days are up, 80% of the time the year closes higher. But I wrote all about this already, and I'll post it in the blog tomorrow with a link on my Facebook page as well as my Twitter feed. So that's that. God, I lost my train of thought. That's pathetic. Okay. We had a huge day on Thursday in the markets and a not-so-huge day on Friday. So you'll see Friday's numbers up here. Let me do one thing. I'm not going to do that now. I'll tinker with it later. So Friday, the Dow closed down 170. S&P was down 17. 95 bips on the Dow, 84 bips off on the S&P, and less on the NASDAQ. Russell and mid-caps were around the same. Here's the key takeaway for me from Friday. Here's the number of issues up and down in the day. There were 1,145 advancers, 1,900 decliners. For a down 1% day, this in itself ain't so bad. It should have been a lot worse. Okay, that's one. So on the surface, it looks a lot worse than what I'm seeing from the advanced decliners. And up-down volume on the New York Stock Exchange was about 2.5 to 1. That's nothing for a down 1% day. So beneath the surface, didn't look so bad. Doesn't mean we can't collapse, but it didn't look so bad on the surface. Bonds, we'll go into some commodities, maybe some currencies. I'll turn it over to Tiny. He'll be on to discuss, he'll to answer your questions on individual stocks and give his take on the market. Let me just move my screen around what you can't see, but I can. Okay. And then I will open the questions up. Right now I'm not seeing the questions, but I promise you I will. Okay. As you know, we go through the ETFs rather than the indices because ETFs have actual openings. Oh, I know what I was going to mention. Tomorrow, if you're around and bored and doing nothing, I will be on I'll be on CNBC at 3:50, live from the NYSE. And then at 6 o'clock, I will be at Fox Business from 6 to 7. So if you want to see my ugly mug, turn on CNBC at 3:50 and Fox Business at 6 o'clock. And with that, let's go to the Dow. So as I wrote on my blog during the week, and I mentioned last week when we were here, let me just, we don't need to look at a whole year. Let's just dial it down a little bit. That looks better. So last week we left off, I think, here. Is that right? Bulls had to make a stand, in my opinion anyway, and they did. We had a nice 2-day rally on Wednesday and Thursday. Friday's day, price-wise, doesn't look so nice on a chart. Here's what I think. Here's the key takeaway. We must go to new highs now, okay? If we continue to roll over much more than closing this gap right here, then I think we'll have double this decline. So if we begin to roll over, this will be a really bad failing rally if the peak was Friday. And I think from there, if we do roll, hold on, let me just change this up a little bit into an arrow. So if we do continue to roll over, I think we will take out last week's low very quickly. Maybe pause at the December low, do one of these, and then have a deeper decline. Okay, that's if we really roll over and this gap doesn't hold. Then I think we're doing one of these. All right. Bulls need to make a stand now. We need to see all-time highs again. And even if we do, I would still maybe negative, but I think we have a better shot. Right now, it's put up or shut up time early in the new year. Well, let's go to IMDb, get rid of that awful tick. The S&P looks almost the exact same as the Dow. Same thing. The Bulls need to make a stand in the next couple of days and within, 1% of here. Mid caps, exact same thing. Bulls got to make a stand. Okay, no secrets there. And the small caps, surprise, surprise, the same thing. Bulls got to make a stand. So that's my thesis heading into the new week. Bears got a little momentum price-wise from Friday. beneath the surface wasn't so bad. It's time for the bulls to step up in the next 1%. Europe, I mean, what can you say in the short term? It still looks dreadful. Although, as I may write about in my 2015 Fearless Forecast, which will be out shortly, I think that Europe's got a chance to outperform America this year. I don't think it will be like it was last year. But I don't think it's happening just quite yet. I think for the course of the year it happens, but right now Europe's got some repairs to do. And finally, the emerging markets, which as a whole don't look so wonderful. The individual emerging markets, for full disclosure, I am long. I gotta think. I'm long EPI, which is India. And right now, kind of the same thing. Look at this beautiful consolidation. Okay, Monster Rally, which I really enjoyed last year, and they've been consolidating since May. So it's time for the bulls to break out. If they don't, I'll get out of this. But I've held it almost all of 14. So I'm long India. I am long the Philippines. Same thing. Time for the bulls to get their arse in gear. And I'm along a little bit of China, which has had a decent little run. So those are the major indices. Let me stop and look at your questions and comments. So if you have any questions, comments, post them, and I'll move on to sectors. Let's see. You're tiny, tiny, tiny. And, my newsletter. And you can go on to investfortomorrowblog.com, and you'll see contact stuff there. Let's see. Scott, time to hedge us. I don't know, Scott. I'm not sure I'd hedge just yet. And maybe, this is one of those things where I have a little bit of, not baggage, but because my thesis is for higher prices, maybe I'm a little skewed to the bullish case right now. So I'm not willing to give up yet. A couple more days like Friday, especially if the AD numbers and the up-down volume numbers expand, then I obviously won't hold on to the bullish case. But for now, I want to give the bulls the benefit of the doubt. How would I position for certain earnings reports coming out this week? And again, I'm not a believer that if you're a trader, I think you got to be really careful holding stocks over earnings. Could you own some options? Yeah, you could, as long as the implied vol isn't too high. But I think you got to be careful. I don't think, and there's any kind of trend into earnings. If stocks sold off into earnings like they did in October, I was really, really bullish that this sell-off is going to reverse right as earnings really began. We don't have a rally or decline in earnings. We're the same place we were 2 months ago. So I think any kind of trend there is moot. Okay. Thanks, Ron. Ron said, nice call on TLT. Thanks. I'm still long, but I got sell signals developing. We'll talk about that in a minute. All right, let's go on to the 3 key sectors. Let's go to banks first. Let's type it in correctly. So here's the bank index. It's kind of sort of similar to the S&P. It looks a little weaker. It has not been a great market leader for a while, so I'm not going to read a lot into it. I don't like this. Low, lower, low, lower, low. I don't have a position in the banks. So right now, last week we rated it neutral. I'd probably downgrade this to negative right now. Transports look a little stronger. To me, this is a pair of twos. They're about as neutral as you can get. Same place they were in November. If you're a bull or a bear, you can make a case for either side. What concerns me about the trannies, and we were long them for most of last year. We sold them right here. Crude has collapsed in the last 2 months, no secret. Yet the transports have not rallied sharply. So that's the only thing that concerns me in the short, maybe intermediate term, is that they stopped going up when crude oil collapsed. And finally, the semis, which, for full disclosure, I have a significant position in. This is the only one. Of the three sectors, this is probably the strongest. They bucked the trend on Friday and closed a little bit higher, called unchanged. So I give them the benefit of the doubt to the long side. So we've got one negative sector, one neutral sector, and one slightly positive one being the semis. Not exactly what you want to see if we're going to explode to 20,000 right now. You want to see these in a little better shape, and they're not. So those are the three key sectors. Let's go on to the secondary ones. And a bunch of these I'm going to go quickly on because they're so minor, like software. Software looks about as neutral as you can get. No real comments there. Telecom, which is a little more defensive. Telecom has big yields in it. 4 or 5% yield. They should have done better last year, but for fundamental reasons they didn't. Staples rallied last year. Utilities rallied last year. REITs rallied last year. These did not. So they're on my list of possible leaders for 2015, but I see absolutely no reason to jump on board now. They look about as neutral as you can get. Diversified financials look a little stronger than the banks. Right, here's the banks. So the diversifieds look a little stronger than the banks, but really more like the S&P 500, neutral, and we got to pay close attention. They closed the gap on Friday, so they're a drop weaker than the S&P, but really they're about as neutral as you can get. Consumer discretionary. So what do we see? We still see higher highs, and we still see higher lows, which means it's still in an uptrend. Be interesting to see what happens this week here, but clearly consumer discretionary. It's amazing. I track to begin 2014, which you can read about when I publish my forecast. I thought the consumer would be dead in 14, and while they weren't great last year, they didn't fall apart. The consumer. So I think this is encouraging. The retailers specifically look even stronger than discretionary. So, So this is even more encouraging. The retailers made all-time highs on Thursday. So this definitely shows you that the consumer is far from dead. Industrials, which are definitely a late-stage bull market leader, are not leading. They look just like the S&P 500, maybe a drop weaker. And materials, which are an early-stage bull market leader, look crummy. They made their last high back in early December. You've got lower highs, higher lows. As Tiny would say, they're coiling up. You want to call it a triangle? I probably won't argue with you. So this is just not a sector I would want to be overweighted this year. Energy, still groping for a bottom. It's all over the news. Are we getting closer? We should be, but so far, no signs. I continue to own a small piece of OIH and losing in it and disappointed and frustrated, but I'm probably going to stick with this for a while, considering it's a small piece. And when it snaps back, maybe we'll get a rally back to close this gap right here. But it certainly is anything but bullish on any time frame. There's on a weekly basis. Doesn't look great. As I mentioned, I thought we'd seen a pretty good low back here. We're now, you want to call it a retest, okay, fine, but doesn't look so great yet. Some more defensive stuff. Staples, I mean, they're a leader, so we made an all-time high on Friday. They're expensive, but money is certainly flowing into Staples. This is your Colgates, your Procter and Gamble's, your Unilevers, etc. Your defensive issues. They still trade well. Utilities, which I own a significant position. So my sector holdings are: I own utilities, I own little OIH, I own semis, I own the REITs, which I'll get to in a minute, and I own a little bit of biotech. So here's utilities. They pulled back nicely. This is kind of put up or shut up time. They're supposed to begin to rally back to new highs. If they can't get going and they turn tail, they're probably going to go down into the low mid 40s from here. So right now the benefit of the doubt is on the bullish side. Healthcare looks pretty good. This is definitely a sector that if stocks stabilize early this week, I'll be looking to buy some XLV Healthcare because they are leading. And at this point in the market, personally, I want to stick with the OIH is an unusual one because it's so bad it's actually good. The rest of my sector holdings, I want to own leaders. Semis are a leader. Healthcare is a leader. Biotech is definitely a leader. So that's where I want to be. Biotech looks fine. I own a small piece. See what happens in the coming week. And real estate, IOIR looks. I've owned this for a long time. It looks fantastic. Continues to look good. So those are the sectors. I will be happy to. Let me look at the questions. Okay. How about XLU and XLV? I covered that. Do they have enough engulfing bearish candle? Yeah, you've got some. You do have. Who mentioned this? Richard said you've got a bunch of dark cloud covers or bearish engulfing patterns on a bunch of the indices and sectors. They all look kind of sort of similar. The reason I'm not jumping up and down is because I view them more negatively when they come from a high, not from the middle. So I'm not as excited bearishly if this would have come up top. That's why I didn't get and mention it more. Let's see, XLU a leader in 14. Ron, XLU was the leader in 14. That was the number one sector of 14, XLU. For 15, it's unlikely to close the year as a leader, but doesn't mean it can't have a good 1 month, 2 months, 3 months. And Ron, don't forget, go back and look. Utilities were a great leader at the early part of the dot-com bubble bursting. Fantastic leader. Let's see. Yeah, and from my seat anyway, I would want to own sector leaders. We're in the last quarter of the bull market, and I don't think it's time to play laggards. I think you want to stick with the leaders. As the leaders lose their leadership, the bull market's going to lose its bull market status. So at this point, that's why I have no interest in materials. Okay, and really, energy. If it wasn't so decimated, I'd have no interest in energy either. I just want it as a short-term snapback. But I think energy's done. I think materials are done. Industrial should be a lot stronger. I don't really have interest in owning these either. So I think you got to stick with the leaders. All right, let me see any other question on sectors. All righty. Let's go on and look at the bond market. So here is the 30-year Treasury bond futures, which are pretty close to recent highs. They're certainly extended, and while I wouldn't buy them up here, I still own them in the form of ETFs and funds. GLT, which I've mentioned, I think I've owned it, except for 2 short periods, I've owned it since the end of 2013. It's been a great trade. I wish I had a lot more money in it. But it acts well. I got a couple of short-term sell signals right here. So any kind of weakness was expected, but it doesn't seem like the move is over yet to the upside. On a yield basis, the 10-year, there's your yield chart. Now, if you thought rates are going higher, you could certainly say, well, this doji is testing this wild day when stocks bottomed, and now rates are going to start heading up to 275. That'd be a stretch for me. I wouldn't say that. And if I go look at the 30-year yield, it doesn't look as good as the 10-year yield. So I think you got to give the bulls the benefit of the doubt still in the bond market. Let's see what else we did. Bonds. Let's do a little gold. No, let's go. Let's go to the reason I use stock charts for JNK is because it pays a monthly dividend, and eSignal does not factor out the dividend, where stock charts does. So let's just take a look at JNK, which I own in my high yield ETF portfolio. I am all in. I'm 100% long JNK. Intermediate term, it clearly does not look good. A lot of this decline was due to the energy companies from the middle of the country, especially the frackers and the shalers. It's the small companies who floated high-yield bonds or junk bonds to finance their capital expenditures, and there's concern that they won't be able to refinance the debt next year and certainly can't pay it back. So that was responsible for definitely this whole decline here, which is a huge decline in junk bond terms. Now this is significant low and little retest, little secondary decline, and now we are, I don't want to say we're off to the races, but we're certainly trading okay in high yield bonds. So regarding high yield being a canary in the coal mine, I'm going to go on a limb and say that we've seen the highs for the bull market in high yield bonds, which means the stock market will lose one of its drivers along with the Fed. But it doesn't mean high yield bonds are going to collapse. I would just think maybe they tread water, go a little bit higher price-wise, and then just clip the coupon all year. And if you don't like the ETF, JNK, because it's a little curve-fitted, let's go to the PIMCO high yield bond, which is a good representative sampling. And you'll see kind of the same thing. Big collapse, big rally. Still making lower highs, lower lows. Doesn't look as bad as JNK because it's a lot more diversified, but doesn't look wonderful either. So, and while I'm here, let me pull up the advanced decline line. Oh, dummy. Okay, let's see what we got here. Here's the New York Stock Exchange advanced decline line. Still, we just made an all-time high. That's why this is another reason I don't think the bull market's over. We need some separation. If this is in fact the all-time high, then the stock market should continue to make some higher highs for at least a couple of months. So we covered bonds, we covered junk bonds, we covered the NYSE advanced decline line. Let me go take a look at questions. One sec. I promise. All right, no new questions. Ron, I just read your post. If there's a question in there, let me know and I'll answer it. Ron trades VXX and XIV. I trade XIV. VXX is such a crummy constructed ETF. It's essentially the VIX. Because of the futures rolls in contango, you have very small margin for error. You can't be patient with VXX because you have a permanent headwind in this. All right, so let's go on to gold and the gold stock. So here's gold. I traded GDX last week. On gold itself, I'm fairly neutral. We're right back into supply. It looks like a pair of twos to me. Could go either way. I do not have a strong opinion on gold in the short term or the intermediate term. Long term, get by another year or year and a half, I'll be very bullish on gold. I'm just not bullish on it yet. Let's go to GDX. Which are the stocks? So I traded these. I came into last week long. We had a great run for me. And I took, what did I take last week? I took half off here on this day and probably, I'm still holding a little bit. That's right. I took half off here. I'm still holding a small position here, looking to get out on one more run. It looks okay. GDX, not a world beater. It usually doesn't bottom like this, whether you want to call it a W or a complex bottom. GDX normally bottoms in V format, like the V fashion, excuse me. So it could support a rally further, but is this V low? I don't know. I'm not excited about it. Copper. Smart money is locked and loaded on the long side in copper. So personally, I would not be short copper. I think you're in a bottoming process right now, and I think the next big move in copper is going to be higher. You're really oversold, and again, that smart money is really locked and loaded on the long side in copper. So let's see, crude oil. I mean, what can I say? It's been a complete and utter disaster. Is it going to bottom? Yeah, it's going to bottom. Is it going to bottom right now? I don't know. Gun to my head, somewhere between here and $40, which helps you zero. But volatility is blowing out to enormous levels. It's very hard to play crude unless you play bull and bear spreads. In which case, I look to put on a bull spread, just not yet. I probably look to put on a bull spread at lower levels. But this is a complete and utter collapse. At some point, when it bottoms, you're going to get a pretty good rally. I saw the stat. I didn't compute this, so I didn't test it. After a 50% decline in crude, the next year it rallies 50%, which means if you go from 100 to 50, it goes from 50 to 75. So if it goes... So 110 to 40, half of that gets you back to $75, which kind of makes sense. But we're a long way away from there. So crude is a disaster, and it's going to take some time to shake out the incredible volatility there. Let's see, crude, natural gas. Similar to other energy, it's a disaster, and you look for a bottom, but I probably wouldn't step in front and catch this knife yet. think I'd probably just sit and wait. I think a lot of these commodities are just too decimated to go short, but it's too early to go long, and the best thing you can do is just hang out and wait. Don't be in a hurry to lose money. Wheat, getting a little oversold, but I don't want to touch wheat yet. I would look to the long side of wheat, just not right now. Corn, which made me look like an imbecile last year. Looks like we have a rally unfolding, probably worth a poke to the long side right here. And the reason I say that is because your risk is pretty defined. If corn closes below last week's lows, 2 weeks ago lows, I get out. But I think the risk is tiny enough that it warrants a trade in corn to go to new highs up here. Soybeans, kind of the same. This is Tiny will say this is perfectly coiled up for a move. What are you doing? Oh, okay. So that's corn. I'm sorry, that's soybeans. This is really coiled up for a move. You'd definitely lean to the long side. And look for a breakout much higher in beans. See if that materializes this week, but it's been going on for months. It doesn't have to be right now. Cocoa, no real opinion on cocoa. Coffee, I like this bottom here. Love this bottom here, actually. Bullish engulfing. I hate 2 days in, 3 days into the rally, you're already seeing topping tails. So probably stand by and do nothing with that. Cotton, wound up, ready for a big move. You have to lean to the long side. I think that's it for the commodities. Let me check questions. Why can't I pull up the questions? There we go. Okay. Let's see. So let's go to the dollar, which, as I said, I will pat myself on the back for 2 good trades last year. Having been long TLT and having been long the dollar. I've been long the dollar, seems like forever. It's really hard. I would not buy the dollar up here. Just like it would not short the euro down there. We'll get to the euro in a second. Long term, I think the dollar still is going higher, but smart money is locked and loaded short on the dollar. So I would frankly look for long trades in the euro or a short in the dollar. Would I put it on today? No. I want to see a bit more of a topping pattern, but I would only play the dollar short term to the short side and the euro to the long side. Here's the euro, which has been decimated. Smart money is locked and loaded on the euro to the long side. So could this be a bottom? It certainly could, and I wouldn't be opposed to owning a small piece on the long side in the euro as long as you agree to get out if it closes at new lows. Closes at new lows, not trades at new lows, closes at new lows. But I think shorting the dollar, buying the euro, and buying some commodities could be a decent trade over the next couple of weeks, if not longer. And the yen, which we were all over the short side forever, kind of the same thing with everything else. It looks like it wants to bounce. The yen into any strength, I'm a seller. I think the yen's going down another 50%. So any kind of good strength in the yen, I would get short. With enough room that you can withstand a better rally against you. But the yen, I think, is going to go much, much, much lower. Okay, let me see what we got question-wise. So Ron wants to talk about volatility. Ask and ye shall receive. So Ron, let me just go to the VIX. It's easier. So Ron wants to know what do you think about vol? From the market timing class, those of you who came, we had 2 VIX buy signals over the last month. So vol right now, I don't want to put a trend line here. I mean, yes, you could, but it's kind of saying it's kind of silly. I don't have a huge opinion on the VIX itself right now. I do think the VIX, being long the VIX this year is going to be a profitable trade, but you can't just buy VXX because it has a permanent headwind to it on the way the contracts are constructed. I do love buying, trading XLV to the long side after markets go down. So for my personal account, not for clients, I got really lucky and I bought the VIX down, the XIV down here in pretty good size. And then I sold half on this day, and I think I sold half on this day. It was, I think, the best trade I made all year. That was good. But right now I don't have an opinion on volatility. I guess I want to see how everything shakes out in the short term. Well, the grain report around 12 o'clock tomorrow. Joanna asked about I didn't know there was a grain report tomorrow, but if it's the crop report you're talking about, there is almost no doubt it will have a significant impact on the grain. So I don't like trading anything around a big number. I think it's just kind of guessing. I don't like guessing. It's hard enough to make money in the markets without guessing based on a news event. So I'd probably stand aside if you have a position and wait. I am Sam. I just covered the yen for you. When you say smart mushroom, Paul, when you say smart money is locked and loaded, so Mushroom said, when I say smart money is locked and loaded, I'm just commenting on that from the commitment to traders reports, which tells you what the hedgers, commercials, large speculators, small, non-reportables, the little guys doing. Smart money is usually early, but they're rarely wrong. So it gives you kind of a something to look out for once the security stabilizes. So yes, it's exactly what I'm looking at. Mushroom room. I kind of like that. Mushroom room. Meet I am Sam. Let's see what else do we have. Any other questions? Any securities I didn't bring up? You want me to bring up? Don't ask about stocks. Tiny's going to cover that in full detail. If you're in our market timing class, I'm following up from the hour class I did last Thursday. I'm targeting this Thursday at 8:30 for another hour class where we're going to cover, I think I've got 5 topics scheduled for this week. The only caveat is I've got media tomorrow and I'm on Fox in Connecticut on Wednesday, and then I have a presentation for a client of mine. So hopefully, assuming I have a voice, I'm going to target 5 topics for Thursday night at 8:30. Let's see. I keep hitting the questions section. I keep getting the wrong. 1 second. All right. So Aaron just commented that smart money is the commitment to traders. When you trade futures, you have to let the futures commission know who you are. Are you a hedger, meaning are you ExxonMobil and you're trading oil? Are you a farmer and you're trading the grains? Or are you a small speculator like we are and we're just trading back and forth? Johanna asked about the Swiss franc. I didn't know anybody trades it anymore after they pegged it. Here's a Swiss franc, which I have not looked at, frankly, in a long time, and I didn't even realize it was just decimated. So it looks like oil. My first glance, my flip comment is I would not be short because it's already collapsed. At some point, you're going to get a big rally in the Swiss franc. But there are some cross currents which I cannot recall the Swiss and how they're treating their currency. They've been trying to weaken it against the euro because they're killing their economy. So I probably wouldn't go near the Swiss franc until I understood what the Swiss central bank is doing. Any other questions, comments on anything? Mike asked, what's the strategy for getting out of January FX stocks? Mike, we're going to send an update Probably tomorrow, if not tomorrow, on Tuesday, because the calendar is running out on those stocks. So we will definitely start to put together some exit plans for that list of
By
stocks.
the way, I'll have a video tonight updating all of them, by the way.
Gosh, you're wonderful, Mike.
I am wonderful. But we'll have definitely Monday, Tuesday, we'll talk about exit strategies on some. Yeah, Mike, that one is down, but there are others that are doing okay. So,
Any other questions, comments, concerns before Tiny comes in and brings you home? Going once, twice. Ron, the ETF for the euro is Frank X-Ray Edward, FXE. Australian dollar, I will pull it up, but I'm sure Tiny's got a more intelligent view than I do. Smart money is locked and loaded on the long side of the Aussie dollar as well, and it's just starting to percolate now. Pretty nice move. I had a prospect who came in and they had a bunch of money stored in Australia, and I know it was up in here because they asked me, what do you think? We want to move some money back in the States. And I said, I'd probably get out of the Aussie dollar. It was trading poorly. I didn't think it was going to collapse from 93 to 80, but it's been a disaster. From here, I think you probably have a rally coming here. You have a little divergence, which Tiny can talk about. Stochastics going up, price going down. That's a sign of a rally or reversal. Smart money's locked and loaded long, so that's another sign. Anything else? Alrighty. Tiny, it's all you, buddy.
hey, thank you, Paul.
Mike?
Yes. Yes?
I just want to say Mike.
Oh. I just want to, I'm adjusting my screen, guys, so I get the most chart in it. All right. Send me your stocks, and I will go over one stock per person, please, till everybody gets their turn. Then we'll take seconds. And I will not go over January effect stocks because there are people. If you want a January effect stock opinion, you could just email me. I'll gladly give you opinions in private. I just can't do it here. You know what I mean?
No, what do you mean, Mike?
I don't know. Didn't you want to go early so you could leave?
I just want to torture you.
Good. All right, keep going. Come on. Keep going. Just list them, guys. Just list them. And when the big list is up, I like to bang through them all.
We're going to call you the banger.
Yeah, the banger. That's what I am. Oh. Wow. It's going to be a great game next week. I think New England's going to be the game to watch next week.
Yeah, it's just hard to believe that Luck's going to be able to go into New England. I'm going to root hard. I hate Brady and I hate Belichick, but it's hard to believe that Luck will have the same luck he had in Denver, back to back. I think the game is the Seattle-Green Bay game.
Nah, I think his legs. I think all they're going to be talking about is his leg finally showed, what was really wrong with it. That's mine.
It's amazing. You look at Google, Amazon, Netflix, Apple. None of the monster stocks.
No, I was banging my fist short on those on the video, and they look terrible.
Intel, I'm long semis, but Intel looks nice.
Yeah, Intel's beautiful. Intel's the nicest looking stock. I actually did that for my video this week. Here it is. It's already done. Yeah, I love Intel.
Great minds think alike.
Or
at least one great mind and then your mind.
One great mind and then you. No, this is because this is such a nice slow mover, but it's in a really good one. All right, guys, couple more stocks. Come on, give them, and then I'm just going to go through them all.
Got to root for Oregon tomorrow.
Yeah, but the guy got in trouble. The receiver got in trouble.
You still got to root for. I mean, I never root for Urban Meyer.
Why? He's the best college coach in history.
Well, I don't know about that, but I don't root for him because he's the best. He's the best. I'd rather take. And you know, it'd be nice to see Oregon win a national championship. I'm not a Big Ten fan either.
All right, that's it, guys. Now we're gonna go. Ready? All right. KO. It's Coca-Cola. Yeah, it's sloppy. I don't see anything here, and this is right in the middle of this last push, so this is a little sloppy.
How's the Golden Globes?
AGN, you gotta turn your mic off. Hey, turn your mic off. Oh, guy. You know, oh boy, I may have to kick him out. Hold on a second. Oh, they're singing. Oh, it's great over there. All right, I muted him. Boy, that's tough. Who knows what you could hear in the Schatz household. AGN looks okay. It's just coming out of this base here. So if it sticks, it's okay. If it doesn't, then you don't want to stick around. That's for sure. McDonald's. I mean, here you go, but it's between the 50 and the 200 day, so I'm not really looking for. You needed to get him above. PRA is starting to pull back. I mean, it's overbought, right? I wait for it to finish up. FEYE, yeah, got to get above that 200 day. I mean, nice base here. Got a nice base on this one, Dave. So you want to see if it can break out from it, though. Morgan, yeah, a little sloppy here. Is this going to be a high or low, or was this pushed down the start of, a deeper pullback? Fuel, yeah, but base. I mean, I don't. You got to wait for it to dip its hand. I'm pretty worthless with stuff like this, guys. I got to tell you, because this is telling me that the market is the stock is in a equilibrium pattern, and we got to wait to see which way it tips its hand. ALK, overbought. Like it on a pullback low. It looks pretty strong. UNG is a piece of garbage. Still looks lower. This is a pretty nice shot to the downside here. Should bear flag up and go lower. Netflix looks lower. This is a little mini stealth continuation pattern. Netflix looks lower. Priceline, yeah, it looks lower too. Priceline looks like it wants to test the October lows. MIK, yeah, I mean it's just overbought, but it looks very strong. It's tough for me to buy in when it's up here, right? When it's after a run like this. Let it pull back, let it form a base, and then from there, we can look at it. Schlumberger does not look good. Looks like it wants to test the lows before it tests the highs. Test the highs, sorry. It's a stupid statement. Looks like it wants to test the lows before it gets a bounce. I apologize. Wow, that was bad. KGC looks nice, but it's headed right to the 200-day moving average, so we want to watch that. LLTC, yeah, it's sloppy, but it is over the moving averages. So let's see if it could set up here and try to make a move out of this pattern. MBLY, yeah, this is a weird one. It's in a big wedge, right? So it's going to move eventually, but how many days are in an eventually? Does anybody know what the law is? I don't know what the law of how many days an eventually is, right? SGen looks like it wants to go lower. This is looking weak here. TJTX could be a failed flag pattern. This was a nice flag. We come up. Now it's turning back down. Let's see what it does from here. LEN, L-E-N. It looks like it wants to test the highs, but I don't like when they're stretched this far from the moving averages. I'm looking for reversion, you know. WFC, now it looks like Citigroup and JP Morgan and Bank of America, they don't look good here, right? Because you got the stuff down, and then, I mean, it looks like it may want to come down out of here to the 200-day moving average, but you got to wait and see on that. Citigroup looks the same. I think it wants to test the 200-day moving average. Loco. Okay, Loco maybe bottoming out here. You got a little wedge here, and now you're coming up here. See if it can hold this pullback. Then it may want to try to move higher, but it's got to hold the pullback. If it doesn't hold the pullback, then you got to let it go. Here's Apple. Yeah, Apple looks, you got a possible to-be bottom here, this is called. See how it broke the lows, then trapped everybody, came right back, but you really need to get above this 115 handle. Pfizer, yeah, it's overbought, but looks really strong. REGN, yeah, this is a good one, Steve. You got the pattern here, right? I love these. I love these triangles here, but you got to wait for it to tip its hand, and Friday was no freaking help. Because Friday is like, oh, we haven't decided where we want to go. Let's put a spinning top in, right? So it's not really helping us here. But this is a nice one. I want to see where it goes. And, of course, if it breaks, you want to make sure it sticks because you can't jerk around with a $400 stock here. And, let's have a loose stop. Let's have a $30 stop. Actually, the truth is a $20 stop is not really that big a deal on a $400 stock when you think about it. It's only 5%. Right, if you were going by William O'Neill, that's not even, he's 8%, right? He's an 8% guy. LNG, yeah, it's another nice one. This is another nice one, Jay. You got you got the triangle here, and it's right on top of the moving averages. This thing is like dying to move one way or the other, but we don't know which way it's going to be. We don't know which way that's going to be. Facebook, still doesn't look bad, but, got to really get off its arse here. It has a higher low in here. It's trying to hold this trend line. Let's see if it can go. I do like the way Facebook trades as far as volatility-wise. I like that. I always like when stocks chill out with the crazy volatility stuff. FE, yeah, not bad. See, I don't like these big shoot downs here, right? You look at it, it's only $3, but remember the stock doesn't really move that well. This was a gorgeous breakout here. So it doesn't move. It moves well. It just doesn't move that crazy. So let's see if it can go on the bounce. STT, yeah, it looks like the rest of the banks, right? You had the big push down. Now it came up. What's going to happen here? Is it going to break? Or is it going to put a higher low in and try to move up? AA. It has earnings, so I'd rather wait and see on this, but I guess the 50-day moving average is what we're looking at. AFSI. Yeah, I don't like this gap. It has to fill this gap here in order just to start for me to consider it bullish. If it doesn't fill the gap for a couple of days, then I'm looking for it to continue lower, actually. It's called the 3-day unfilled gap rule, right? You had it here. It doesn't fill in 3 days. It continues. Doesn't fill in 3 days. It continues. It doesn't always work. Excuse me. It doesn't always work, but it's a nice background indication. I love that, actually. I looked at Facebook and Netflix already for you. Len. Yeah, Len looks like it wants to, I think I already did this too. It looks like it wants to test the highs. All right. What else we got? We got Brocade. Yeah, it looks nice. A little overbought, but it's in a strong trend. Lilly. Yeah, Lilly's interesting because Pfizer is running. Lilly is, it looks sloppy, but it does have a nice consolidation pattern right into the 50-day moving average. Love, exciting and new. Now, you think that the airlines would really benefit from oil getting destroyed, right? Who was overpaid? Me, Scott? I'm definitely overpaid. Oxy looks like it wants to test the lows. I did McDonald's, right? Yeah, all right, I did all these. Okay, so I'm missing these. Goldman. Yeah, Goldman looks like the banks, right? The push down. Then the retracement. Let's see what's going to happen here. Okay, the Ohio State coach. Right, I'm sorry. Yeah, Hutchison just starting to perk up, but talk to me when it can get over this ledge, and when it gets over and it sticks there. But that's not bad. That's not a bad one to watch. TMF it's overextended, but it's a very strong trend, right? So I would look for pullbacks for buying opportunities. NAT, again, very stretched, but looks great. Guild, fill gap after 3 days, not to make your point that it doesn't always work. Right, like this one. Like here's an example, right? You got the gap down, then you got 1, 2, 3, and if you start shorting here, you lose, right? But also there's more to it than just, it doesn't fill in 3 days. Like this, Gil, you could see is so overextended after the gap. But if it gaps and then goes sideways and then goes, it's different. But you're right. It doesn't always work. But look, this filled the gap, so it's a bad example. But some of these are interesting. The 3-day unfilled gap rules. They're really interesting to watch, and they're really good to pay attention to. But you're right, they don't always work. Nothing always works. I wish it did. Listen, I have a football system. It didn't work today. So it worked today. It worked it worked yesterday. It didn't work today. So yeah, it worked yesterday. It didn't work today. All right, guys. Have a great night. Thanks for coming. You're right. Absolutely, Gil. The bookie's the only one that wins. If you're interested, Mon, M-O-N. Okay, sorry, Sam. I did see that, Sam, and I didn't get you. I apologize. It's sloppy. It did hold the 200-day. I mean, I could just force fit a line here. I don't want to. No, it's actually a good line. Yeah, we didn't really have a big turnout tonight. We only had in the 80s. So, usually we're over 100, but I don't know. Maybe everybody's crying that Denver lost or something. But we're going to be taking some initiative to build this up. So we're going to be building this stuff up. So we're going to have more people so the show will last longer. Anyway, LNCO, it's wait and see, but it's going to move because it's in a consolidation. So it's going to go either or. No, it's okay. SLW. I want to watch the 200-day, but it looks like it's going to try to go. Yelp. Yelp. Yeah, Yelp is nice. It got over the 50-day moving average. It just needs about another 100% rally to get bullish again. But no, I mean, it did get over the 50-day. I'd like to see it maybe pause here and then try to ratchet its way higher to like the 200-day. See, here's a 3-day unfilled gap rule here. Here's a 3-day unfilled gap rule here. And they're all over the place. Moss. Yeah, it's got to get over the 200-day. And this is a little sloppy here. This is sloppy. So, I mean, you're probably better off drawing your candle there, your trend line there. This is sloppy, though. But you're right in between the 200 and the 50. Baba. Yeah, I mean, I think it's a big bull flag, but let it confirm. Let it confirm before you jump in. X1, yeah, whatever this is, the X1 company, this looks lower. This does not look good. All right, guys and gals, see you next week, or I'll see you on the daily email. I'm going to go do my video now. Talk to you soon.